pleased to be able to introduce Samarkand Group to everybody this evening. Hopefully in the 15 or 20 minutes I'll be able to give you a good overview and have some time for questions at the end. We created Samarkand back towards the end of 2016 because of the huge opportunity we saw in the e-commerce market, but very complicated e-commerce market, but large e-commerce market in China, and the rising affluence, a rising middle class and upper middle class, and a corresponding demand for international products. It would be no surprise that cross-border trade with China has increased drastically over the last 20 years. In the early 2000s, most countries shared greater trade with the United States. Over the last 2 decades, that map has changed quite significantly, very much in favor of China being the major trading partner with most of the world. Now, this is in both directions, export and import. We focus on the import from into China for overseas Western and international products. But what this has done, combined with a very innovative and fast-growing e-commerce industry, is create high demand and a flourishing cross-border industry, which we participate in. When you look at the overall e-commerce market in China, it's approaching $3 trillion. Sorry, far ahead of any of the other countries, and in fact larger than the next 10 markets combined. Currently, this e-commerce market is dominated by the marketplaces in China, such as Alibaba's Tmall. We of course operate on those marketplaces, but we've always had a vision for the business that we would enable the really long tail of merchants and brands that have interesting products, curious consumers in China who want to buy their products, to be able to do so directly from their own e-commerce infrastructure in the same way that they can sell to consumers from Japan, the USA, the Middle East. Currently, that's a little bit more tricky for consumers from China, and I'll explain why and what we do about that. Just a little bit of information on the company itself. We are listed on the Aquis growth market on the Apex segment. We listed in March of this year. We raised £17 million in an oversubscribed IPO, and then shortly after we took a further £3.1 million from SF Express, who are one of China's leading parcel delivery companies, a strategic partner of ours. Prior to the investment, we developed some joint solutions together, and now they're also a shareholder. We also have, in the form of corporate shareholders, a company called Samarkand Group, who are one of the world's largest retail service companies, employing around 80,000 people globally, providing retail solutions for a lot of the world's leading consumer goods brands. We're also the winner of the Aquis Company of the Year at the Shares magazine this year as well. So looking at our business, we have 3 distinct but complementary divisions, and these have been kind of evolutionary of the business as part of the business as well. In the early days, our own brands and e-commerce acceleration were and still are the core of the business, and that has led to us realizing our vision, the original vision of creating the actual pure technology now as well, which is something that we're starting to roll out. Taking each in turn though, why do we own brands? We own a small portfolio of health and wellness brands. These are popular categories in China. They have been very important in the formative years of the business, enabling us, particularly the ProBio 7, enabling us to explore different e-commerce channels, partnerships, business models. We buy them on a buy in the West, kind of build in the East strategy. So brands with high growth potential in China, as well as their domestic markets. And we've, as I say, we now own three brands in that space. We don't intend to make any more investments in brands for the foreseeable. The focus has been shifting towards our e-commerce acceleration and our technology part of the business as well. as we've accelerated there. When it comes to the e-commerce acceleration part of the business, this is where we're working with third-party brands that we don't own, but we are growing their brands in China on the marketplaces, on the e-commerce platforms, and also there's an incubation element as well for brands that are earlier in their journey, where we're working on social media, social selling with influencers and celebrities to start to introduce those brands into the market. Under that, we have two solutions, essentially our Nomad storefront and our Nomad distribution. And then under our SaaS technology, or Crossborder as a service technology, we have our product called Nomad Checkout, which is where we see the potential not just for the dozens or potentially hundreds of brands that we could work within our e-commerce acceleration business, but the thousands, tens of thousands, hundreds of thousands of small merchants, small and large merchants that want to enable Chinese e-commerce from their own websites. In the interest of time, I won't spend time on the own brands. I'll focus on the e-commerce acceleration and the technology part of the business. With our Nomad storefront solution, this is where we're operating on some of the major platforms in China, Tmall Global, for example, from Alibaba, Xiaohongshu, which is a bit like Instagram but with a strong focus on e-commerce. And then quite excitingly for us, recently we launched our offering for Douyin. Douyin is TikTok in China. It originated as a video live streaming platform, as it is in the rest of the world, but has quite quickly become a significant player in e-commerce as well. 2 years ago, retail sales around £15 billion. This year, that's going to be closer to £100 billion. So quite quickly becoming a major player, and we're pleased to have launched our first store on there just a few weeks ago. For brands, merchants that aren't at the point where they are able to support the kind of sales that can come from these major platforms, we have what we call our Nomad distribution solution. That is where we are working with influencers, celebrities, key opinion leaders, key opinion consumers across a wider range of social media channels. And through our integrations into these different technologies, we essentially can drop ship products from either our warehouse in the UK or from our warehouse in free trade zones in China, directly from there to the fans and followers, the consumers that are shopping on these social media channels, which is in China is a huge part of the industry, the e-commerce industry. That's all powered by our Nomad platform. It's a proprietary platform that we've built over the last few years. It solves a lot of the pain points that merchants have when entering this market. Our storefront and distribution models are a managed service as well, so we're involved in the delivery of the service. With Nomad Checkout, this is enabling any merchant who has an e-commerce store to navigate those pain points. Unfortunately, I don't have time to go through all of the pain points, but site translation, site speed, Chinese payment methods, logistics, customs are all stumbling blocks, hurdles for these international merchants wishing to sell there. So what Nomad Checkout does is encapsulates all of that, and can either be deployed as a plugin if you're a merchant using something like Shopify or Magento, or if you're an enterprise that has their own e-commerce platform, it's possible to integrate directly into Nomad Checkout through our custom APIs. That what we found is the original vision for this was for the long tail of merchants that want to enable this on their site. But what we found is that we're getting a lot of interest from the larger enterprises who have existing sales into the region, who see right away the value of what we're doing here. And we've actually just announced two client wins, one in South Korea, one in Hong Kong, just this week. In fact, we're also under a pilot project with a large UK retail e-commerce company, and we have a pipeline for this product that we're very excited about, and not just with merchants, but also other important partners in the ecosystem when it comes to e-commerce. So logistics companies, payments companies, e-commerce technology companies who see the uses of what we've built with our Nomad Checkout. I thought also interesting from an investment case point of view to highlight what China is doing in terms of leading the world in e-commerce. I think it's probably most Western consumers and Western investors probably don't quite realize the extent of the innovation and the technology that is taking place in China. I think at least 5 or possibly 10 years ahead of Western markets in many ways. One example is live stream commerce, which arguably is QVC on your mobile phone on steroids, but it's actually a lot more than that. It's in China, it's grown a phenomenal rate. 2017 were the first live streams, $3.6 billion of sales. This year, that's going to be somewhere around 300 billion. And what we're seeing is that this form of e-commerce is starting to move out of China into other territories. Other parts of the world have a very especially in the West, we have still the same kind of form of e-commerce that we've been using for many years. In China, the level of innovation and the rate of change is quite spectacular. And what younger audiences particularly are gravitating towards these kind of new models. In the UK and in Indonesia, the 2 pilot countries for TikTok shopping, so ByteDance, who own Douyin, TikTok, as it's known in the West, are now launching their live stream commerce into Western markets, starting with Indonesia and the UK, as I said. In other Western markets, we're starting to see this format growing as well. In the US last year, $5 billion worth of sales already through live streaming, expecting to double this year, perhaps even treble by 2023, according to Coresight. And we're already starting to see some early movers in the US with billion-dollar valuations and some other small players starting to emerge in Europe. I think as a business, we're in a fairly unique position, not just from the opportunity we have going into China, but our experience in this Chinese e-commerce, these formats that we've been engaged with for a number of years already, starting to have impacts on the wider e-commerce markets around the world. I think that's close to my 15 minutes, so I'm open to questions now, I think, Roland.
So in no particular order, it was really interesting there you were saying about how Chinese consumers purchase. Could you explain the mechanisms, how people in China buy through social media and other channels, how that works on a practical level?
Yeah, so China has a different kind of social media landscape to the West. There is no Instagram, there's no Twitter, there's no Facebook. They have their own versions. So you have to make it's sometimes easier to make closer approximations. One of the very most popular channels is something called WeChat, which is somewhere between WhatsApp and Twitter and Facebook, perhaps. So it has a message. It's at its core, it's messaging, but it has a whole app ecosystem within it. In there, you have lots of influencers, consumers selling to or key opinion consumers selling to one another through the WeChat app. If you imagine something like Shopify as an enabling technology for Western merchants, there's similar technologies in China to allow small merchants and small sellers to build stores on the platform very, very simply and easily. What we have done is integrate into that enabling technology. It's called Youzan. in one of the instances. And what that then means is these small merchants can list our product catalogs into their social media feeds, into their videos, into their stores, and essentially promote them to their sorry, I'm just trying to get that video to show again. Promote them to their fans and followers. They don't have to hold any stock. That's held by us or the brand partners, and then the orders come through into our Nomad system, and we provide the e-commerce fulfillment services. So in this example here, it might be a little bit difficult to see, but this influencer is selling a whole range of products. This face mask is one of our brands. So she's created all the content, all the store content, and then her consumers can sort of buy directly from this feed, and it all flows through us.
So something I've looked at recently. So using that example, the influencer can talk about a product, and then the consumer can click on that directly and be taken directly to a transactional site or the opportunity to buy that product without going to a store, without going to a third party. They can do it directly through the platform. Is that right?
Yeah, so if you actually just see here, I don't know if it's obviously all in Chinese, but you could just see here that this is the transaction flow just happening. So this is within that, you would say within that, within the WeChat ecosystem, and it's a very frictionless and seamless payment flow using either WeChat Pay or Alipay. No, people in China don't have Visa or MasterCard. It's almost unheard of. It's all WeChat Pay and Alipay. Again, that's one of the kind of hurdles that Western merchants face when dealing with Chinese consumers from their own website is they don't accept those payment methods. But
and the next question is about merchant recruitment. How does that work for you? Do you have a direct sales team? How do you get new merchants?
Yeah, so historically it's been a combination of cold calling, finding brands where we saw strong potential. One of our key partners, or one of the key brands that we work with, for example, was high-end skincare that we knew was very popular amongst Chinese consumers in Harrods department store. They had a massive demand in China, but no way to address the market. So we spoke to them directly, and they liked what we were doing. And this was in the early days, and they're now a long-standing partner of ours. That's how we kind of did a lot of the brand recruitment in the early days. Now what we're finding is brands that have already been in China for some period, working through local partners, are approaching us for us to take over the services. Morovitsa, a brand, is one of them. We've got others in the pipeline that we'll hopefully be announcing soon as well. Because one of the differences on that part of our business to the kind of incumbent model of having to work with a local Chinese or distributor or trade partner is, we provide a lot of transparency. Our account management teams are in the UK and Europe. They all speak French, Spanish, German, Italian, and Chinese, so we can provide that kind of close account management. So when it comes to recruitment of new brands, it's now a combination of PR, advertising. We were relatively active on LinkedIn and through industry press. We have a webinar series, for example, going out right now on a publication called Beauty Matter, which is bringing in quite a lot of leads from US businesses, for example. So that's
That leads perfectly to the next question about the US market. And do you have any penetration into the US? And if not, how are you going to address that?
So we don't currently. We're quite UK centric, and we have, that's where we're a UK company. That's where we started. We now have clients from mainland Europe. We actually opened an office in Tokyo earlier on in the year because there's a lot of demand for Northeast Asian brands, particularly from South Korea and Japan, and they actually struggle with cross-border e-commerce, it turns out, into China as much as Western counterparts. So we had a very good opportunity to start addressing that market. The US is obviously a very key market for us in the long run. We don't have any penetration at the moment, but it is on our radar.
Next question is about a recent acquisition. Is it Napiers?
Napiers,
The question is, Napiers. What did you get out of the acquisition, and why did you buy it?
So Napiers is so the other two. Just to set the context, the other two acquisitions in our the other two brands in our portfolio are a digestive health supplement brand and a fertility and pregnancy brand, Z2S. Napiers is a very heritage brand. It's 1860, established in 1860, the oldest natural health brand in the UK. That kind of provenance, the story, and the products that it sells we know resonate very well with the consumers and the channels that we operate in China. It's been a brand that we've always had very positive feedback from the brand, from the channels that we work with in China, but it's not been but they've never been in a position to sort of scale up the business to the point where we could do a huge amount with it in China. So what we get with that is a very good brand story, a wide range of products, and it also moves us into kind of the functional skincare as well as the kind of the health, which it's very complementary to the rest of what we're doing. And I think I mentioned as well that these brands have been quite useful for us to kind of explore new channels and new business models and new partnerships, and that's something I think we'll hope to develop with that brand as well.
The next question, can you talk about the retail distribution marketplace in China? The question is saying, I don't think Amazon are particularly prominent. What are the dynamics in China? And I think we've spoken before about the investment you've had from a local partner, and how what's the importance of that?
Yeah, it's a good question. So yeah, Amazon has no real penetration in China. When it comes to marketplaces, it's Alibaba dominate. So Tmall, Taobao, as you can see on the screen, is another one of their platforms. There's their kind of competing platforms called JD, and the other big platform is called Pinduoduo. Those are the kind of the three big platforms. Douyin, as I mentioned, has recently become a significant player as well in a relatively short space of time. I think the characteristics of this are that there's more fragmentation than the West. I think Amazon, is very dominant. In China, you have a kind of a bit more of a fluid ecosystem with more platforms, and platforms rising and falling from relevance sometimes quite fast. So part of what we do is we're across multiple platforms, and when the time is right, as with Douyin recently, they just opened up the platform to cross-border sales in June, and we were able to get on there very very soon after that with our first store. So it's a market that moves quick, changes quick, and so working with a partner like us who's across multiple channels can be really beneficial for a brand as well.
Super. Final question then. You mentioned at the start that you're Aquis listed. If you don't know Aquis, you can buy via the AJ Bell UMS platform. But the question is asking, would you consider moving to AIM or the main market? Would there be any benefit for you to do so?
We're happy with Aquis so far. We've had had a good response at the IPO. We buy into what Aquis are doing. As Ron just mentioned, it's now possible to trade Aquis shares on AJ Bell, and they're adding support for more and more platforms. I won't mention the names, Roland, don't worry, as time goes on. So yeah, I think we're happy with the with being on Aquis, and we don't have any plans to move to AIM or the main market. Yeah, but yeah, never say never, but that's certainly not our intention, and it's not something we've ever entertained.
That's
so
fine.
far.